The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading. We got positive markets. We got higher yields yet again. We got Jackson Hole coming at you Friday morning. Chairman Powell speaking Friday morning at about 10 a.m. Eastern Time. That's going to be the main event of the week, but we got NVIDIA earnings this week as well. Among some other companies, we kick things off with the market. S&Ps dive down to a low Friday morning of 43.50. We finished the session on Friday at a price point of about 43.88. You see the volatility overnight. We were above 4,400. Right now, we're just below 4,400 at 43.93. NASDAQ 100, we're up by about 65 points. That's 0.4% in the positive. 14,808. You got the Dow right now positive by 29, 34,594, and the Russell is flat, we'll call it, at 1865. We jump to crude. Catches a bid up above $81. We're pulling back in the last few minutes. Crude at 81.08. We were just at 81.70. Excuse me. Not sure what's going on with the drop off at 9 o'clock, if we got some economic numbers there or not, but nonetheless, crude still up $44 on the 44 cents, on the session. You got the gold contract catching a little bit of a bid as well. We're up by $8 at 19.25, we'll call it, on the gold contract. We jumped to notes and bonds, as I mentioned. Lower price, higher yield coming at you. We got the 10-year yield. I think we're above 4.3. Are we above 4.3? We are above 4.3. 4.31%. The yield on the 10-year as we're climbing towards the high yield we had on Thursday, which is pretty much correlating to the high yield we got last October, man, sitting at about 4.31%. The yield on the 10-year. And yeah, yields will be in focus this week dramatically with Chairman Powell speaking Friday morning. You have the 30-year negative 30 ticks right now, actually below where we were on Thursday's action. And you jump over to the dollar index this morning, DXY. Catching a little bit of a bid in the last few minutes, right? Since about 7:45, 8 o'clock this morning, from 103.15 to 103.32. We take a look at the dollar on a little bit larger term picture. And yeah, we are in an uptrend channel, man, pushing the lower boundaries potentially of that uptrend channel, but basically right back to where this acceleration, we've talked about it before, right? About July 4th, we're trading at a price in the dollar of 103.50. You dive below 100, we get it all back, and now we're at that area again at about 103.33 in the dollar index. We jump over to the volatility index this morning. We got a new normal in this market, man. You got the VIX on higher price when we got the market in positive territory. Not usually how it goes, folks. We almost hit 19 on the market lows on the open on Friday. Market accelerates higher throughout the day. The VIX gets some of that back in terms of pulling back to almost 17. But this morning, we have an elevated VIX with markets green across the board. So pay attention to that one as we come into the open. All right, what are we going to talk about? Let's kick it off with yields, man. Bond bulls. Yeah, and you know what? Before we do, let's take a look at just where we are this year, okay? That's your 10-year on a short-term basis. Let's just put it back a year. And you don't have to go that far. There's your beginning of the year right there. We had the 10-year at a price point of about 112.5. We're down to 109 right now. Okay, so if you're in yields, what have you had? You've had a capital depreciation. You've lost capital on that level in terms of getting into that price at 113, right? And we are now at 109, let alone if you were buying the 10-year at almost 117, you're at 109 right now. I mentioned those. Well, let's do the 30-year before we jump around as well. Because, boy, you solve this conundrum, man. You got everything going on in terms of figuring out what is going to happen with yields going forward and how they shape everything going on. You got the 30-year, kicked off the year at about 124. We're down to 118. You were as high as 133 on the 30-year. You talk about duration, right? This is where everybody talks about buying duration, okay? You can see, if you're in the 30-year, you buy duration at 118 and you get the turnaround you expect, boy, you could be back at 133, okay? But boy, that is a big if, folks. We'll see where we go. We might get some fireworks on Friday. All the conversation talking about what's the real rate going forward, right? What is our star? What is the real rate of growth in this economy going forward? Where is the Fed going to need to be? Did they try and recalibrate that to some degree on Friday? The market will not like it if they start talking about that they're going to accept inflation to the degree of 2.5% or even 3%. That's the conversation out there, and we find out on Friday. But this is the reason why people talk about buying duration, because you can see on the inverse of that, the problem here is that when you buy duration and you're wrong, yeah, you get squeezed on the other side as well, okay? And we're talking about you're at 118. Now, I made this conversation last week, though. It seems like it's a great place to buy if you only look at this chart going back to basically 2008, okay? Hear this one, folks, okay? Because there are always two sides to a trade. This price point of 118, I mean, what did I just say? I just said we were just trading at 133 earlier this year. You said, well, geez, that seems great, man. I can buy a 30-year at 118. People were paying 133 for the same fixed income over 30 years less than 6 months ago. You look at this chart, you say 118 is not bad. We were just up in the 190s. We were up in the 170s in 2016. We were up in the 160s in 2015. We were up in the 150s yet again in 2012. We made it to a high of 140 almost in 2009. But here's what I will caution you. A lot of articles getting written about the fact that we were in exceptional times when you had yields at 0%, folks, and that might not be the case for some time going forward. And guess what? Take a look at this chart. If that is not the case going forward, okay, if we are in a new normal, which basically means that 0% is not going to be around for some time, okay, then you're getting into the 30-year at 118, and meanwhile, anytime before 2008, that would have been lower price coming at you. So it's got room on both sides, man. We're at an interesting point in the yields right now with the 30-year down a full point as we're getting lower price and higher yield coming at you. They were talking about on Bloomberg this morning. Look at this thing dropping off as we talk, man. Who's out there listening to me selling these bonds right now? I kid. But the real yield's even pushing. You're getting 2% on your money, man. Yields are at a level right now above inflation that you are getting real percentage points of real wage growth, real return, I should say. The real return, real rate of return, which is the rate you're getting minus inflation. Okay, it's pushing almost 2% right now, which is some big numbers, but boy, look at this move, right? Just since 8:20 in the morning, we just dropped 8 ticks. We're at 109.07. So much for the reprieve we got on Friday. All of that is basically gone. We were up to 109.28. We're pushing the lows of Thursday's session yet again. And interesting that when you talk about Chairman Powell, okay, it's all going to be on Chairman Powell. I would love, as many would, I'm sure, to be inside his head for a moment as you come into Monday morning and you got yields pushing highs. You got the 10-year above 4.3. You got the 30-year up down more than a full point in terms of spiking to highs as well. And we are right back to Thursday's concession, and all the conversation is, hey, are we really getting back to 2%, man? Seems like that we might be adjusting to a new normal in this economy with higher yields adjusting to a higher rate of inflation going forward and a higher growth rate. We'll see where we go from there. You got the S&Ps up by 10 to kick things off. I mentioned we got NVIDIA earnings coming out later in the week. You jump over to NVIDIA. They're catching a bid this morning, up by almost 10 or 11 points. Somebody was out. Maybe somebody can help me out in the den. I think we had a forecast. Somebody out, one of the competitors came out and pumped something. Let's see if they got the news. I'll check it out during the break. NVIDIA is going to be out with their numbers. Let's see. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We get the markets trailing off a bit with the S&Ps up by just 8 points right now. You got the Russell rolling over to negative territory. I know my mic cut out right at the end of that segment. Had to replace a battery. We're back in action. And we're talking yields, okay? And G-Bolts talking yields in the den. Yeah, the CDs, man. And he says there are some 6-month to 2-year CDs north of 5%. And there are. If you're not familiar, folks, the numbers right now, okay? I'll give you to them. These are CDs that are non-callable. Now, these are brokered CDs, okay? So you can go out to various banks within your brokerage. You can buy these CDs. They're brokered CDs, a little bit different than going to the actual bank itself, but nonetheless, these are non-callable, FDIC, SIPC insured CDs, okay? And the numbers you're dealing with right now, even a 2-year, 5.05%. He's talking about north of 2% right now, okay? 5.05% on the 2-year. If you're going anywhere shorter than that, you should be getting about 5.25%, man, because the market's basically sure that we're staying around 5.25% for some period of time. A 3-month, 5.25%, 6-month, 5.3%, 9-month, 5.3%, 12-month, 5.3%, 18-month, 5.2%, okay? And then the 2-year goes down to 5.05. Now, here's what's interesting. You want the CD rates, okay? These are CDs. These are not treasuries, but obviously they're correlated to a good degree. You go out to a 3-year, you're getting 4.8. You go out to a 4-year, you're getting about 4.65. You go out for a 5-year, 4.55 is the number. And here's the coolest part about this, folks, okay? Is that you can ladder all of these, okay? And if you are in retirement and you're thinking about something like a CD and putting some cash in there, instead of going out duration, right, where you buy yourself a boatload of long duration CDs thinking, okay, I'm going to lock this in. Well, you see the risk there. I just went over it somewhat in the 30-year. Now, that's a 30-year, okay? But let's just see how far back the 10-year goes out of curiosity. Yeah, see, the 10-year is skewed. We don't get the data before 2003. Okay, so you do have lower price action. We made it all the way down to 103 when you had some high yields in 2007. You made it all the way down to 103 when we had some high yields in 2006 before that new normal kind of kicked in of 0% interest rates, all right? But if you ladder a 1, 2, 3, 4, and 5-year CD right now, you're getting 4.87%, and that is the APY over those 5 years. So basically, you can lock in a 5-year ladder, and you can be pushing about 5% right now for a CD. And then the cool part is that you get to roll over every year to the next rate. So if rates stay high, you're somewhat protected, because what happens? Well, when that 1-year CD rolls over, you take that cash, you put it back into a 5-year. If rates are high, that 5 year is going to be helping you out. On the flip side of that, if inflation squashes, you're protected on both sides to a certain degree, right? Laddering. Anyway, I thought it was interesting. Not a lot of people, I think, would realize right now that you can get a 5-year ladder that pushes you to about 4.9%, 4.87. That's what I got it up this morning for a brokered CD. Now, the last part of that conversation is, okay, that's a risk-free rate of return over a period of 5 years. Well, we got the market right now trading at 43.92, okay? And what I'm going to show you real quick, I'm going to use 5%, okay? To show you that after the first year, okay, that would push you, if you invested in the S&P at 43.92, well, your risk-free rate of return 1 year out from right now would give you a price of about 46.11 in the S&Ps. So that's what you're getting, risk-free rate of return right now if you go into the CD market. You do it again for the second year, you're talking about 48.42. You do it again for the third year, you're talking about 5,084. You do it again for the fourth year, 53.38. And at the end of that 5-year CD, you own an S&P that is equivalent, an equivalent S&P of 56.05. So those are the conversations you want to have with yourself, okay? And depending on where you are in the risk tolerance of your investing, of your retirement, you want to make those decisions. My retirement, folks, my 401k, I'm all in growth stocks practically, okay? This market's doing just fine in the long term. In the short term, though, there is some extreme volatility that we are coming to, man. We got Jackson Hole on Friday. Nobody's quite sure where the new normal of interest rates is going to be right now. There's a lot going on in terms of volatility in this market. And you want to understand that if somebody said to you, hey, if you buy the S&P right here at 43.92, I'll make you a deal. I'll give it back to you at 5,600 in 5 years. You want to take that deal? A lot of retirees would probably take that deal. Well, that's the deal that's being given to you in the CD market right now. And if you're comfortable taking that deal, then take that deal in the CD market and don't risk anything in the equity market, because we don't know what can happen. It's a real return, folks. And when you start compounding it over 5 years, you're talking about big numbers that brings you to the S&P at 56.05 right now, risk-free. Okay, 5 years is a long time. As we all know, this market could be at 5,600 in 6 months from right now. I somewhat kid, but not really. I mean, we just jetted from a price point of, we just went up 1,000 points over basically the last year from the low to the high, okay? And that is talking about basically going 1,000 points from this year's high to the next high. So there's opportunity costs. We all get that, all right? But when you talk about these rates, they're going to be in focus, man, and that's going to be a competition for capital. It's especially interesting. The markets have held up so well when you think about the amount of cash that is choosing the risk-free rate of return right now, whether it's just sitting in money market funds, et cetera, right? That's going to be a persistent influence in this market. All right, so let's jump to, where is it? Where's my article? There it is, bond bulls. Bond bulls at JP Morgan and Alliance keep piling into a bet gone bad. Treasury returns turned negative for 2023 as yields jump. So we went over, right, the prices of where these equities are, where these notes and bonds are right now, the mark-to-market capitalization of those. You're losing money on an equity basis if you got in the beginning of the year and you wanted to sell. And what they're talking about, man, is that the CIO for JP Morgan Asset Management, Bob Michel, he was on the case in 2019 talking about, listen, last year, right? Is that what they're talking about? Yeah, correctly predicted the slide in yields all the way down to 0% from 2% in 2019. He's buying every dip. So you got buyers out there, man, and they are looking for a reversal from these lofty levels we're at right now. But they're down 1.5% over the past month and beating just 35% of the peers. If you're in this trade, you're getting pummeled, man. Bond bulls face mounting losses as yields march higher. There's your treasuries, man, losing money on a negative basis. And what is that? Basically inverse to where we are on the chart. And the reason I went over the kind of this long, deep dive into the yields, right? It is so important, folks, to remember this 30-year chart, okay? 10-year doesn't even go back that far. But remember the 30-year chart. Everybody's talking about duration, and at least be aware of the risks present, okay? Some of us are technical traders, and boy, that does not look like a big buy just yet. Okay, that looks like a stock that's on its way to $2 or something like that, right? Where you're just getting right across the board. You're challenging the lows of last year. And what's so interesting is I think we've all come to the realization that there's a very real possibility that 0% interest rates are gone forever, at least for some time. And if that's the case, consider that the area above where we're at right now is the price action that took place when interest rates normalized around almost zero to negative on some markets across the globe. So then what you do is you say, okay, compare the price action where we're at right now to where we were prior to that. Well, maybe that's what we're coming for, man, because we're at a level basically that's a high price for anything prior to 2008. All right, folks, we'll talk some equities. We're going to take a look at NVIDIA when we get back. They got their numbers on Wednesday. Stay tuned. We're coming back for the open.
Attention traders and investors, are you ready to elevate your game in the stock market? On August 23rd, join Basil Chapman, the mastermind behind the renowned Chapman Wave methodology, in a subscriber-exclusive 90-minute webinar. From 4 to 5:30 p.m. Eastern, dive deep into the secrets of the 914 moving average, decode market turns, and get a head start on the stock outlook for September and October. The golden opportunity is free for all opening call subscribers. And if you're not on board yet as a subscriber, here's the deal. New subscribers get a 30-day money-back guarantee. Zero risks, all rewards. So what are you waiting for? Visit the front page of TFNN.com now and secure your spot. TFNN, educating investors.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. Everything in the green right now with the S&Ps up about 13 points at 43.96. NASDAQ 100 up by 70. You got the Dow up by 21 this morning, 34,582. And the Russell sneaks back into the positive territory right now with the Russell up by 2 points at 1867. We jump to commodities. Gold catches a slight bid, up $6 to $19.23. We jump over to the crude contract, hanging above $81 at $81.27, and we jump to notes and bonds. It's been the discussion of this program. It'll be the discussion of many programs, folks, especially coming into Jackson Hole on Friday. I believe Chairman Powell speaks just after 10 o'clock is the action there, I believe, for Friday morning, and you get a lot more than that going on. I think it's a 3-day symposium, right? But it's all about Friday morning in terms of Jackson Hole out there. He'll be speaking. I think it's even 10:05 a.m. Eastern time is potentially that number that he'll be talking at. And what do we got? We got yields coming back to those lows. Pretty remarkable. All right, we're going to talk a little bit of migration. Some cool stats in here. Now, this is from Bloomberg. This is out, I guess early this morning. I was reading it early this morning. New York and California each lost $1 trillion. Each lost $1 trillion when financial firms moved south. Okay, so check out some of these numbers they talk about here. We're all aware of it. Now, but as they put it here in Bloomberg, for the first time, there are hard numbers quantifying the exact scope of the exodus. Both states have in the past 3 years lost firms that manage close to $1 trillion in assets. With them, you have people coming that work for those companies. 17,000 firms is what they went through, okay, talking about the filings of these companies. The exodus from the Northeast and West Coast, not a lot of attention goes on to California as much as New York, okay, but they're in the $1 trillion number as well. And where are they moving? Texas and Florida. Now, what was interesting here was, going through this article, they talk a lot about the reasons why people move, right? Coming out of the Northeast, man, weather is a big factor, okay? Quality of life, sunshine, blue skies. Now, man, we got some heat in Florida in August, okay? If you can avoid Florida in August, head on out to Cape Cod, man. They had the beautiful Falmouth Road Race this past weekend. Watch that. Beautiful weather. It was in the 70s, folks. It was in the 70s. The course records on the Falmouth Road Race. You know what? I'll bring that up next race, too, because that's home close to me. Ran the road race in 2019. Can't believe that was 4 years ago. And I said it before, folks, if you're thinking about doing something, right, don't wait till next year. You never know what's going to happen. We spent summers in Cape Cod, Falmouth, Mass, right by the Falmouth Heights. Good old Falmouth Heights, man. Those were some awesome years growing up. They always had the Falmouth Road Race. Wasn't sure I'd ever run it. Got my act together. Figured I had a chance of doing 7. Now, here's the other kicker here, folks. The Falmouth Road Race is not a 10K. I actually found out 10K is about 6.2 miles, so I'm getting ready for the road race, and I'm not. I just wanted to finish, folks. I wanted to finish. My goal was in 2019, finish, and keep running for the entirety of it. Well, I found out like 3 days before it that it's not a 10K that's 6.2 miles. It's actually like closer to 7 miles. Nonetheless, check out beautiful Falmouth, Mass. If you get the opportunity. And yeah, if you're coming to Florida and you can afford to be out of here for some of those summer months, get it done. But boy, we have an amazing quality of life outside of maybe July, August, and September. And even then, plenty to do in the Sunshine State. But nonetheless, 158 companies managing $993 billion in assets moved their headquarters out of New York. 104 firms shifted to Florida, 56 of them from New York, so almost an even split there. Now, they get a bunch of graphics in here. They all make sense if you've been paying attention, right? Where's everyone going? Well, California, you're going to Texas, is a big one there as well. So California is a different deal. New Yorkers, the Northeast, a big factor there is quality of life in terms of weather. In California, they already got great weather. What they don't have is low taxes. And so that's where you're seeing some of the shift going on from California more so to Texas, because it's not about that sunshine that they already have in California. It's about the finances of taxes that come with it. You check out the states, all right? Now, what I found interesting as well is good old Massachusetts. They're gaining assets under management, okay? And they are a high-tax state. Taxachusetts is what they call it. But, boy, let me tell you, folks, as somebody with young kids now, the education system in Florida is abysmal. And I think I'm putting it lightly. I talked about on the program before, we don't even have air conditioners working in Polk County out here, man. They got like 12, 15 schools that don't even have AC. You want to talk about education, okay? So there are benefits to taxes, but it's interesting because New York catches all the heat, and then what do you got, man? You got Massachusetts gaining assets under management, all right? But yeah, New York, Connecticut, good old money Connecticut, losing a lot of money in there. Pennsylvania, D.C., Maryland. You go into the Pacific Northwest, Washington, Oregon, California. And then where's that money going? Anywhere with these types of blues out here. You can see Nevada, Wyoming, Colorado, Arizona, Texas, Tennessee, North Carolina, and Florida, some of the biggest benefiters out there, and Massachusetts, which I found pretty interesting. Now, you keep going. Weather and low taxes draw firms south. Weather is what we talked about, basically coming from the Northeast. Tax is a bigger component when you're talking about California. And the last part I want to get in here, good old Tampa, man. Investment firms flock to Miami and Tampa. Look how many Tampa grabbed now, of course. You got quite a plethora. I think it's 104 or something like that in Miami. What do these add up to? 80? Yeah, no, even more than that, right? More than 100 firms kind of on that East Coast down by Boca, West Palm, Miami, Palm Beach. But yeah, Tampa pulling in some decent money in there with 35 firms, Jacksonville with 12, Naples with 13. And that game has changed forever, folks, okay? Changed forever, to pull it lightly. Now, the last part about this is that this is just like the very tip of the iceberg, okay? Yeah, so check this out. The assets under management outflow since 2020 equals just a tiny fraction of the $25.6 trillion managed in the state. This is talking about New York, okay? Which is still 10 times as much as Florida has. California has $15.7 trillion, okay? And most states, including California and New York, saw an increase in the total amount of assets managed there because of the strong market performance. So, New York's at $25.6 trillion. That's 10 times as much as Florida. So what's that put Florida at? $2.5 trillion or something like that. So New York's at $25 trillion. California's at $15.7. Florida's at $2.5. And still you have New York and California rising from 25.6 and 15.7. They're just losing some of the assets to those other states, but their net number, or gross number, however you want to call it, is still rising because the market's going up so much since 2020 as well. Yeah, so keep that in mind. We'll see where it goes, but it was interesting to see some of those numbers and really how at the tip of the iceberg we are if those numbers continue to change. And I imagine they will continue to change, which is what's so remarkable in terms of where we go from there. And life has changed forever. All right, what do we got, folks? NVIDIA earnings coming up on Wednesday. Let's check out NVIDIA shares. Now, we got Palo Alto out with their numbers on Friday. They're charging higher, up by 16%. NVIDIA getting a couple upgrades this morning. They're up by 3.7%. You jump over to the Analyze tab. You want some action? $47 move priced into NVIDIA earnings coming out on Wednesday. That's more than a 10% move, but guess what? It's not that much when you think about that. This stock is up almost $47. It's up $35 from where we were just Friday morning. All right, folks, stay tuned. We're going to come back. We'll talk some NVIDIA earnings, and we're also going to talk some Basil Chapman webinar coming up on Wednesday as well. Stay tuned. Don't go away, folks.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the markets pushing a little bit higher on the open. We get the S&Ps back above 4,400, up by about 20 points at 4402. NASDAQ 100 catches a bid as well. We're up by almost 0.9%. The Dow right now basically flat, and the Russell negative. Growth stocks catching a bid. And yeah, let's jump around to some of those FANG stocks. Amazon shares up by about, we'll call them, are they Magnificent Seven? Are they FANG? Everything changing. Apple up by 1/3% this morning. Microsoft shares up by 0.8%. Amazon up by about 0.8%. We jump over to Google, up by 0.2%. Tesla shares catches a bid, up by 4.4%. There you go. You jump over to NVIDIA. They're up 4.5% ahead of their numbers on Monday. So some big numbers out there. HSBC, they put out an adjustment to their price target to $780 from $600. So they were at $600. They go to $780 ahead of their earnings this week. $780. The stock was just at $420 on Friday. Absolutely remarkable. KeyBank adjusts their target to $620 from $550. HSBC's got a buy rating. KeyBank's got an overweight. They should if they got $780 and $620 on there. Nonetheless, they'll come out on Wednesday. That'll be an interesting one, man, to say the least. NVIDIA earnings, and as I mentioned, almost a 10% move priced in. Doesn't seem like a lot when you look at some of those price targets and you look at the move this has had and you look at the move this has had even just in the last 24 hours of trading since Friday, as it's up from almost 415 to pushing 453 this morning. All right, I mentioned it, folks. On Wednesday, we got a man, Basil Chapman. He's got a special webinar coming up, folks. Just over 48 hours from right now, he's going to be doing this webinar. It's free for opening call subscribers, so if you're already a subscriber, you're all set. 4 till 5:30 p.m. Eastern Time. It's going to be a 90-minute webinar. Basil will be in there live with all of his opening call subscribers. This will be archived. If you can't attend live, again, it's free for opening call subscribers. So all you got to do, if you want to attend, come on over to the front page of TFNN. You can click on the opening call banner. You'll see Basil, and he is talking about the power of the 9 and 14 period moving average and other indicators in the Chapman wave methodology. Basil's had some great calls in this market, folks, talking about pegging the high on the Dow, and he's going to go over some of those trades, how he uses these instruments when he's trading. As he puts it, assess sustaining power, prepare for market turns, talking about on balance volume, potential for price turns there as well, talking about exponential moving averages. For long-term support and resistance levels, he's going to use these tools to analyze the sector and key stock outlooks for the September through October in the period in the coming markets. And we're coming back, man. We got Labor Day, in 2 weeks from today? Yeah, Labor Day's 2 weeks from today. As the summer ends, we kick back into things. So Basil's up there on Wednesday, 90 minutes. And again, folks, you get a 30-day money-back guarantee. So if you've never tried out the opening call, check it out. It's a great time to do it. You get Basil's outstanding newsletter. He puts out an outstanding update over the weekends. New updates every day. You gain access to that for 30 days. You get the webinar, and what you also get in here, folks, Basil has a number of different webinars that you gain access to. This is just some of them. He's got 3 listed here, 7 others. It's like 10 archive webinars. So you got a amazing value for 30 days. And the best part is there's no shame, man. I hope everybody signs up. And if it's not for you, cancel it. You get a 30-day money-back guarantee. There's no harm in that at all, folks. People sometimes, they cancel. They say, I'm sorry, it's just not. I said, don't say sorry. I said, thank you for trying it out. That's all we ask. Give it a try. Basil will be in there Wednesday for 90 minutes talking about the 9, the 14 moving average, other indicators, unbalanced volume, exponential moving averages, and looking at the sectors and stocks that are coming up for the next few months. Because it's going to be an interesting one, folks, to say the least. I was in there in my group chat this morning, and we're talking about housing prices, right? Why not? Lennar, they're dropping by 2%. Interesting. As we see kind of these stocks that have just flourished actually catching a little bit of a sell-off for the first time. As you got Lennar, just about a month ago, we were at 133. You're at 115, right? That's Darden. I always confuse the two. DHI, DH Horton, we were pushing 132. We're at 115 right now. And yeah, we go back to Darden. They pulled back as well, 173 to 150i. And you know, I was jumping around real quick. 1 second as I... All right, I'll jump around afterwards. I was going to pull something up. I can't find it too quickly. Dow rolls over negative. Actually, as we open here, we got the Dow selling off a bit, 34,550 at a time when you got growth stocks charging higher. Probably led by NVIDIA. As you're up by more than 4%, man, you just got above the highs of last week, and we put this thing on a daily. You're trading at 450 just off of the all-time highs of 480 just over a month ago. All right, what else do we got going on? Boy, keep this one on your radar because it's coming right now. And say some prayers, send some white lights over to the people of California, Arizona, Las Vegas. They are getting some rain that they are not used to, man. And what do you got? You got an earthquake out there in California as well. You got a little bit of a typhoon action going on in terms of tornadoes and so forth. But yeah, say some prayers, keep it out there. Palm Springs, California, there's some visuals. And they are not used to these types of hurricanes. So a little bit of a different story when you get that type. I saw some visuals out there in Las Vegas talking about getting ready for the deluge of mountain rain that's coming. So there are going to be some visuals as usually. Hopefully everyone stays safe and, you know, get ready for hurricane season if you're in Florida too, folks. You know, have a plan. Make sure you got plenty of water. Okay, go out and buy some water if you can. Go out and, you know, store 5-6 cases of water. There's no reason why you don't have 3 to 5 days of water in your house, period. I know this is normal stuff, but it's always amazing. And I think we really learned a lesson during COVID, okay? Everything's always, oh, it's right here. It's right at our fingertips. You've seen the lines in Publix, folks, when storms hit, right? You can't find anything. You want to go buy a generator? Go buy a generator right now. And I'll tell you, I was even looking at them, okay? Again, I'll put this one out. Let's say you don't think you want to afford a generator, okay? Well, I'll put this one out there that you can always return things you buy within 30 days from Home Depot and Lowe's. Okay, so if you're really worried, especially, I got young kids in the house. Everything changes when you got young kids in the house, man. You can't tell a 1-year-old or a 2-year-old, everything will be fine. Don't worry, I can't warm up your bottle because the microwave's out. Don't worry, the air conditioner doesn't work, but it'll kick back on. Just struggle through the heat, okay? You can't tell them, so things change. You can always go buy them and return them if you don't use them. And that would get you all the way through to almost the end of September because they're lofty, man. You're talking about what? You know, $700-800 to $1,400 for a generator, and you're talking about you probably need some window AC units if you really want to be protected there to some degree, at least one, right? So you have one room in the house. A lot of those portable generators, they can't power a whole house. And here's the kicker. I'm just talking about protecting yourself right now. If you are going out and getting a new build house, if you're putting a new build house, if you're getting a new house, get yourself a full easy switch generator, because living in this state, man, my dad, all the houses he builds, he puts a Generac generator on there. You flip the switch, you got power like it's nothing. That's where the future is going. Okay, so if you have that possibility, do it. It's a no-brainer. Put it into your mortgage if you can, even at 7%. But if you can't, make sure you're protected, man. Make sure you have a generator. Make sure, okay, that you are protected, because the storm waters out there, they're pretty lofty this season when you talk about the temperatures, and we are right at the beginning of storm season. So just taking a look at generators this weekend. All right, folks, one more segment. Stay tuned. We got the S&Ps up by 15. Don't forget about our man Basil Chapman. We'll be right back for one more segment. Check it out.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets still in positive territory, but giving back some of that pop we got on the open. We got the S&Ps back under 4,400 at 43.97. Dow rolls over negative, off 50 points right now. The Russell off by 5. We take a look at yields that we spent some of this program taking a look at, chopping around right near the lows of Thursday, 109.06, as we got the 10-year yield right now pushing a price level, 10-year yield with a yield of 4.322%. 4.32%, man. You got to love that. All right, what else we got going on? Meta, they're going to be talking about their Threads is going on the desktop. I was looking for web version is what they call it, I guess. So Threads launched on mobile, and they got 100 million plus. Now they're launching on the web. They're coming for Twitter. They're coming for X, whatever you want to call it. Elon better move quickly to make that the app of everything, as Threads is coming for that business, and they're up about 0.8% with a positive market today. You jump over to the VIX, 1757, chopping around basically where we ended Friday's action, with the market up by 16, though. Remember, market's up by 16. NASDAQ up by 137. You do have some weakness in the Dow, some weakness in the Russell. But meanwhile, we have a slightly elevated VIX. Not always the case. You got the S&Ps approaching 0.4% in the positive right now. And meanwhile, we have the VIX slightly elevated. All right, and as I mentioned, folks, keep California in your eye, your minds out there, folks. Send some good white light out there, because, boy, they are not ready for some of that rain. As I mentioned, I follow some social media accounts geared towards Vegas, talking about Vegas happenings, and, boy, I saw some visuals last night talking about where they drive this mountain rain through. And the desert is not equipped for some of those lofty deluges of rain. So we'll see where it goes. But nonetheless, as I mentioned, make sure you're safe out there as well. And don't forget about our man Basil Chapman, folks. He's coming up next with the Tiger Technicians Hour. Don't miss his webinar Wednesday night. All you got to do is sign up for the opening call. It comes with a 30-day money-back guarantee. He's talking about moving averages. He's talking about on-balance volume. He's talking about the Chapman wave. 90 minutes in there with Basil. Folks, thanks so much for kicking your week off with me here at TFNN. Stay tuned for Basil. We'll see you tomorrow. Have a great one, folks.